Hello and good morning, listeners. Welcome back to Almus Market Mornings with Shikhar Garg, your daily dose of global financial update. A new week to begin, but before that, few updates from the previous one is what I would like to share. A fantastic week for the rupee bulls, as we saw the rupee strengthening against the dollar, and it was not just rupee, but I shall say dollar also lost its strength against rest of the currencies. Majors driving the pack a lot easily. So, what were the reasons? As we can see, is firstly the softer core inflation numbers, which the markets were anticipating for quite a while. On the other hand, we are also seeing some bit of potential peaking of terminal rates as expected by the market participants. Though the concerns have risen towards more tightening in US regarding the kind of budget they have been having on the spending side, and we also have a quite heavy week in the coming days, as tomorrow we can expect some bit of further change in stance by the BOJ, or some further increase in the band, considering the kind of intervention we've been already seeing by the Central Bank of Japan. Russia and Ukraine, though not really active on the war front, show some surviving actions. So, JK, I'd like your views on all these kind of activities that are going on in the financial markets, and what should we be expecting?
Hey, good morning. It's a new week, but I would say, though Asian markets have been fairly active in the currencies, overall activity should be much lesser today because US market is closed due to Martin Luther King Day. We have had a very active week last week, particularly on the USD INR, which was stronger, backed by lower inflation domestically, lower inflation in the US, dollar index falling, dollar rupee at last catching up a bit, backed by also some flows and stop loss selling. And we were quickly down to 81.20 on Friday. From around 82, 80 levels just a week prior to that. And yeah, but I think the rates are stalling here because while we had positives going for the rupee, there are still some challenges, like the oil prices again started to move up. Then we have export sector, which has a challenge meeting its target because of the global growth slowdown, and the deficits of India is still yet to show signs of improving. We'll have evidence of it when the numbers are published this week, and we need to see more consistent flows because we are dependent on capital flows for funding our current account deficit. So not to get too carried away by this dollar rupee move right now. I think it's one step at a time. We'll I think probably stall around 81 levels and then see some consolidation and await further developments more specific to the Indian economy. Of course, in 15 days we have the budget which will be presented on I think February 1st, and market will be looking forward to what the government does with implications for investments in India. On the other side, we had some data from US, not much actually. The preliminary Michigan survey, which showed that the consumer expectations were quite strong, 62 versus 59, and but inflation expectations for the near term fell from 4.4 to 4, although longer term inflation expectations were slightly higher. So it's a kind of once again another data with the growth being seen better and the inflation coming down. That's a good news. On the European side, industrial production data was good again because of lower energy costs and improved sentiment and supply chain as well. Fitch, the rating agency, has in fact forecasted ECB policy rates can go as high as 4% versus 3% that was being said earlier, and the deposit rates to reach 3.5%. So it's something that is actually supporting euro fundamentally. On the yen side, we have, Japanese side rather, we have the ongoing concerns that Japanese yields have been maintained at a lower level artificially. Therefore, this band is likely to be once again extended from 0.5%. The yields are already trading at above 0.5%. And this was tested on Friday very well. The BOJ bought 5 trillion worth of JGBs on Friday, one of the largest ever, to defend the yield curve. However, it looks like they are not succeeding much. And even today it is trading at 0.502, and pressure on BOJ's YCC framework has increased. Now probably there are rumors that the upcoming BOJ meeting will be a very important one for maybe there can be a wholesale changes in their monetary policy, because whatever measures they have been taking so far have not worked. We also have the debt ceiling issue coming up in the US, and Yellen, the Treasury Secretary, has already said that they will be taking certain extraordinary measures if the statutory limit is breached, and it is due to be hit this week. Although we do have this debt ceiling issue coming up quite often, this time it's gaining more attention because I think the political equations are quite tight there, and it may be a challenge for the Biden government to get the debt ceiling relaxation passed once again without much give and take. So markets will be looking forward to the progress on this issue as well. We have Davos World Economic Forum, the annual event, which is happening this week, and it's mostly known, just to give an idea, it is a non-governmental lobbying organization based meeting in Switzerland that happens every year in the mountain resort, and it brings together some 3,000 members and selected participants among investors, business leaders, and political leaders as well. The theme for this year is the cooperation in a fragmented world, and experts, economists, and investors, as well as political and business leaders, will discuss some of the pressing issues such as Ukraine war crisis, global inflation, climate change that the world is facing, and promote innovative solutions. From India, in fact, a contingent of ministers is attending. So while this is a non-official event, it is something that brings about some strong indications on the policies or the views from important people, which can become relevant for the markets going forward as well. On the markets, of course, the equity markets took some positive from the Michigan preliminary sentiment, as well as mixed numbers from the 4 big banks in the US: Bank of America, Wells Fargo, Citi, and it was a market which was hesitant to move up, but eventually ended in the positive. I think a lot of focus on how the recession is going to play out and what the Fed policy will be going forward. And the yields, of course, were to start with, overall in the week it was lower, but Friday saw a jump in the yields because I think profit taking mostly, and even as some of the members continue to hint, Fed members continue to hint at the rate staying higher for longer, though more members are now advocating 0.25% hike when they meet in February. So all in all, nothing has changed for the as far as the policy front is concerned. Other events like the Davos or the debt ceiling talks or the Bank of Japan, these are some things to focus on. Data wise, we have limited data, retail sales and PPI from US will be the focus. Currencies are already pressing on the major resistances, rather the major resistance for the currencies against the dollar. Dollar is testing the support below 102 in the dollar index. Euro closing in on 109, and dollar index, very important level on the charts at 126.5 is very close by. Chinese yuan, I think, is moved quite a bit, and I think looking at the way the time the currencies have taken to move, either a consolidation in terms of time or the price is very much on the cards. So let's hope we will have a more readable volatility this week. Thank you.
Okay, JK, that's really good. And folks, as JK mentioned, there are a lot many challenges that we are observing with respect to INR. The oil has started to move up again, which is one of the major components of the trade deficit. And talking about trade deficit, it has been a concern along with the capital account flows not really being visible. So flows being one of the very key reasons for us to keep watching, as the strength of INR or weakness of INR can be some bit responded by the kind of flows that we're seeing, and overall lower exports from the global markets continue to also push the concerns higher. We do have our budget, which can give us some sort of an idea of what our industry and our government are going to look forward for in the coming few days. But on the other hand, BOJ, as JK mentioned, has been having a good or a tough time, rather, if we say, to manage the kind of band with respect to yields they have been talking about. And this kind of artificial capping has been leading for some sort of a change in the stance further by BOJ, and this shall be available for us tomorrow. More than that, we have, as you must have always been seeing, US debt ceiling review going on, and though usually they have not much of a concern in extension, but kind of political setting this time makes it difficult. But all said and done, folks, it's a heavy week ahead with US PPI, Davos, and BOJ, and other updates in line for us. So let's see how things go by. Just last one more thing, it's a US holiday today, so outward transactions may not be happening for us today, folks. Any plans for any outward transactions will have to be carried out tomorrow. Thank you so much for listening. We shall come back again tomorrow with another round of updates.